Hey everybody, just getting to that end of the course here. We'll be starting chapter 9 of 11 this week. So, this is actually a good point to discuss your second assignment. So, this is your second graded assignment. A reminder that if you haven't submitted your first one yet, you should submit it. You will get some marks, even though there'll be a late penalty. But some of you have the wrong assignment uploaded, or you haven't submitted at all. Same goes with the self assessment for the first half of the course. Make sure you get those in, so you get marks for them. As for assignment two, um, you get a chance to practice a bunch of things from different chapters. The first one here is the moving weighted average cost method. So you'll see here a bunch of data, and what you want to do is just add columns to the right of this. If you want to print this out, you can do that, and just start working on it that way, right? So you can say quantity on hand, right? You can say unit cost, you can say total cost. So just follow that logic as you've seen before, and then you can proceed to the question relatively easily. We're going to have some journal entries for January 22nd and 31st. They're both sales. For this, remember to record both the sales revenue journal entry as well as the cost of goods sold journal entry. So there'll be two for each date. What is the value of Kaylee's ending inventory? This is actually very straightforward. If you make your tables correctly, like I mentioned above, you have the answer. Cost of goods sold, again, not a difficult question. All you have to do is just add up your numbers from your journal entries, right? I'm not sure if there's another sale. Yeah, there are a few more sales. Just add them all up, with the same logic as you have for your journal entries. Then you have your first in, first out method, and again, you want to create the subsequent columns: quantity on hand, details, unit or total cost, right? So something like that. Again, journal entry for those 2 days dates again. Ending inventory should come straight off your table, and COGS expense, we just add up all the sales date at the individual time. If you're confused about this one, basically, if you have a, a total inventory value, a total cost column, what you can do is just look at differences. So every time there's a sale, how much does it drop by? Obviously, for the first one, that's not the case because you don't have a preceding number. But if you add that beginning inventory number, then you can follow the same method throughout. So what was the inventory pre-sale, right? The line before, and what is it after the sale? And the difference is the COGS if you do it right. This next one is a bank rec. So you have your bank statement. You're basically going to go through it and see what's missing on the bank statement, and also your book records. And you're going to basically reconcile based on what's missing on the book records and on the bank statement. So that should be the same process as you see in your notes. Again, you don't have to put panel A, which is a list of all the reconciling items. You can go straight to your bank rec if you prefer to do that. But if you want to make a list, you're free to do that. Journal entries, remember, for the book side, we have to update the book. So go ahead and make journal entries for the book. And again, you can date them on the last day of the month. Keep it simple. Here we get the chance to practice chapter 9, which you will see this week. So you get a chance to practice a couple of methods here. Percent of accounts receivable method. And then we'll have a rate. So basically what you'll do is you'll take into account that you already have $120 in your allowance, and basically use this method to figure out what should be in that allowance, right? And make the appropriate journal entry. Once you have that, you can try the aging of accounts receivable method. Here we have the rates given to you, and we also have the data from here, right? So this is the data. So just sort that out, apply the rate, pretty straightforward. Make the journal entry. Again, I'm a bad customer, I guess, so my account is uncollectible. So you practice writing off my account, right? That's first you estimate the bad debt, and then you actually write off the actual account using your allowance. And then you also practice a reversal, where I'm taking the court in order to pay half of my balance. So I go ahead and do that, and then you have to undo the write-off and then record the collection. So you got some practice with that. This one is depreciation or amortization, however you want to call it. We will have first the units of production method, and it's very straightforward. We're just going to assume a usage of 20,000 kilometers per year. So you have a pretty even, basically just like doing straight line, but we'll do units of production. Make sure you have the right headings. And then we'll also try a double declining balance. So make sure you're able to calculate the straight line rate and then double it. That's the key part of this question. To figure out the DDB rate, that's follow the steps in your notes. Here, we get a chance to make an adjustment using the straight line depreciation rate, right? So straight line revision, try that one. And finally, we get a chance to dispose the asset, right? So that's a more complex process, right? Of removing the truck, it's amortization, accumulated amortization, I should say, adding the cash, right? And calculating the gain or loss on disposal. So you have some practice with that. Last one, we will have a payroll question where you have to initially figure out what the gross pay is and then adding the deductions, figure out what the net pay is. And finally, just make journal entries for the employer, right? So the employee contributions, right? That's what the employer retains from the employee paycheck. And remember, whatever left over will be cash paid out to the employee. And then you make a second journal entry for the employer's contribution to match the CPP and 1.4 times the EI. And finally, the remittance to the CRA. Just be aware it's for the entire month. It's monthly, just not for 2 weeks, right? So you want to adjust your amount so they reflect a monthly total. So two payroll cycles. And make the journal entries. All right, so this video is running a bit long, but hope you enjoy Chapter 9. I think it's an interesting chapter. And I'll see you next time in Module 10.